Hi, my name is Carla Dennis, and today I'm going to be talking to you about the tax implications for foreclosures and how you can utilize them to rebuild your wealth. The tax implications of foreclosure have become very prominent over the last couple of years. A lot of individuals find themselves utilizing this tax tool to rebuild their portfolio. Let me explain to you the tax implications of a foreclosure. Anytime you foreclose on a piece of property, there's going to be two tax implications. The first tax implication is going to be the actual sale of the property. The sale of the property will need to be reported on your income tax return even though you didn't actually sell the property yourself. What happens is the bank takes over the property and will issue you a 1099 for the actual amount of the sales or the fair market value of the transaction. A lot of times this can be in your favor because what happens is we will report that sale at that fair market value, which is normally a lot less than what you paid for the property. Then what you pay for the property is subtracted from that sales price, generating you a loss on your tax return. As an investor, this loss flows over to your personal income tax and reduces your actual tax liability. Rebuilding your wealth using a foreclosure can be a strategic tax move. You have to handle your real estate portfolio as it is another line of business. And sometimes foreclosing is necessary to realign your portfolio and get you where you need for your wealth preservations. The second item you have to take into consideration when there's a foreclosure is the actual debt relief involved in the transaction. If you short sold a piece of property, there is going to be debt relief in the amount of what you owe the bank versus the amount that the bank was actually able to retrieve on the sale. That amount of income comes over to you on your tax return as taxable ordinary income. However, remember we talked about the loss that flows over? Don't be concerned because the actual loss should wipe out the tax from the income that comes over. So once again, rebuilding your wealth through foreclosures can be a pretty strong tool. Nobody wants to foreclose on a piece of property, but if need be, it can happen. The tax implications should be offset by the actual loss on the sale of the property.